The market surely did like that CPI report today. It is Wednesday, January the 15th, and today we got the December reading on the Consumer Price Index. This is one of the key inflation reports that we get each month, and this is ahead of the Fed's meeting. And we were looking to see for inflation at the headline level to rise 0.4%, and it did. At the core level, though, this is why the markets are really liking this report today. At the core level, which excludes food and energy, it actually only rose 0.2%, and the expectation was 0.3%. When you look at the year over year levels, the headline is now growing a little bit hotter than it was last month at 2.9%, and the core level is growing at 3.2%, which is a little bit lower from the 3.3% we saw in November. So let's dig into the details here. The inflation at the headline level was really driven by the commodity side of the market, which did increase for the month. But when you strip that out and you look at some of the things like food that actually grew at a slightly lesser pace for the month. But let's look at some of the areas that we still have a little bit of concern with, and that's on the service side. So if you look at things like transportation services, they're still growing 7.3% on a year-over-year basis, led by, if you look at things like motor vehicle insurance, which is up 11%. When you look at owner's equivalent rent, that actually ticked a little bit higher from 0.2% in November to 0.3% in December. So it's growing almost 5% on a year-over-year basis. These are the things that the Fed's been talking about: the services, the housing, the wages. These are things the Fed's concerned about. Now, we don't think it's going to have them do, this report's going to have the Fed do anything at their meeting. We think they're going to stay on hold. Obviously, inflation, this was one good report on the core level, but there still is underlying within this report some need for concern. So we think the Fed's going to probably stay on hold. We will take this month by month with these reports, but as you can see, inflation's a very fluid situation, and the markets are reacting to this. So the equity markets are up significantly today with the expectation that the Fed can continue cutting rates this year. I think this is just a one report. The markets are rallying on this, and I just don't know that I think they're getting a little too optimistic about where we are from an inflation standpoint. That's all we have today. If you like this podcast, please subscribe, hit that alarm bell. And if you'd like any history of our prior podcasts, you can go to marketswithmegan.fm. Thank you.